Hi, this is Dave with Market Trading Concepts. It is Saturday, March the 17th. Taking a look at the markets from the closing on Friday, March the 16th. So we're going to start out with the stock indexes as we usually do. So Friday was triple witching day, and we had some pretty boring action in the stock indexes. Just going to zoom in here on the daily chart. Intraday on Friday, we had a lot of just kind of quiet action, unwinding of positions, which is something you'd probably expect for, options expiration, but especially triple witching day. So there really wasn't much going on Friday. I was interested in what the close was going to look like. So we talked last week about this level here. So this level here, if we had a break above this candle, I was saying, okay, you know what, be cautious on the short side because we had, a 1 bar break of support, and it came down and tested, tested lower, tested actually these lows, this kind of congestion area where you had these, this higher high in place and then a break above it, and then these tails or these, basically, this is a support area, right? You have resistance, it comes up, it breaks it, comes back down. So this is a support area. So what it did was it tested these lows and this high, this congestion area. So basically what happened here was the market sold off to here, held these lows, and I was saying, okay, last week, be cautious on the short side. If we get a break above this bar, we're probably, going to hit new highs. We're probably going to go higher. So this is something that you would really, you really want to see here. As I was saying, the trend is still intact in terms of our trending indicators and in terms of, the slope of this 21 period moving average. So in order to get a decent short side trade, you would really need to see these roll over, right? And you would need to see some decisive closes below the 21 period moving average, and start doing this, come back up, do one of these and then roll over. So from the perspective of, people getting trapped on the short side, when you see a wide range bar like this is usually something that, gets people excited on the short side. A lot of people like to be short the market, not so much beginning traders, because beginning traders usually get into the market with the perception of, okay, buy and sell higher, buy low, sell high. So that's the perception usually for beginning traders. But, for traders that have been around, a couple of years in the markets, when they see short side action, they like to get on the short side because profits are usually made quicker on the short side. You can see the market grinds higher, but when it sells off, it takes the old adage is it takes the stairs going up and it takes the elevator going down. You can even see this on this one day with this wide range bar. So, we were cautioning to be careful on the short side. I've explained what you'd want to see to take a short side trade, or at least see some indications that it is going lower. But generally, we said, okay, be cautious on the short side, have a look at this level here. If we break above that level, then we're probably going to hit new highs. And you can see what ended up happening here was, you had this one pretty good pull down day, and then the next day it was right back up at, I guess you would call it resistance at this point. But then the next day it closed above it. There's your real warning sign, right? And then I think we closed out last week right on that doji, right on this doji day here, if I'm not mistaken. So, but because we closed above the 21 period moving average again, it's like, okay, be cautious on the short side, and then look for a break of this level for a continuation long. And that's really what we were looking at. And as you can see, that kind of played out nicely where you had, I think this was Monday, and you can see Monday closed right at that level. It closed at the top of its range and it closed right there. And then the next day, look at this bar. It just, bam, off to the races. I think this bar is actually even wider than this bar, or at least the same width. So this is like, you know, this is like some kind of schizophrenic market action. You know, you get this big down bar, the flush out, market likes to move in the proper direction with the least amount of people possible. So people that were probably long in here got flushed out, and then people got sucked into the short side in and around this area, or, you know, if they were being more cautious, right around this area thinking this resistance would hold. So, and then the market, you know, the market just said, nope, you're both wrong, and here I go. And that's pretty typical. That's pretty typical. So having a couple of goofy things going on with my platform here, I guess probably because it's the weekend, maybe they're doing data upgrades. So I may need to pause the video from time to time if we lose our data connection. So basically, you know, we broke above these highs, and this is a potential new swing high. I mean, this kind of action here is not sustainable. You know, so we're probably, if you look at this bar here where we closed on Friday, I was looking to see if it would close actually at the top of its range, but as you can see, it, you know, it came up and then it came all the way back and then it closed close to the bottom of its range. That's a potential reversal bar, but not a reversal in the sense that, okay, now it's time to go short, but it's a potential heads up that we might get a pullback. So, you know, looking at, we still have obviously a long side bias on the stock indexes, or at least on the Dow, which is what I'm looking at. So I think what you'd want to see is, you'd probably want to see, you know, this rising support continue to rise, and see a pullback back down to the 21 period moving average. That's probably what we're going to look at. I'm not sure that we're actually just going to get this little pullback and then push higher. Stranger things happen, but I mean, the bias is still long. This is usually kind of a heads up that there's a little bit of intermediate term toppiness, not overall trend toppiness, but intermediate term toppiness, and we'll probably get a little bit of a pullback, and then you would expect a resumption or a continuation higher from this level. Okay, so let's have a look at the Dow from the Darvas squeeze perspective. And if you look at the weekly chart here, we still have this target of potentially 14,000 on the Dow future. So I mean, we're, you know, here was the initial buy signal. We had a pretty decent pullback, and we've just been grinding higher. Last week we talked about on the weekly chart, we only pulled back to the 8 period. We pulled back to the 8 period exponential moving average, basically. And looking at that, now we're pushing higher. We closed the week fairly close to the top of the range. That's pretty bullish. So, you know, we're already at least half of the target of the width of this box. The full target of the width of this box from, you know, projecting it forward from here to here forward is at this level. So I don't think it would be uncommon to have a move at least to 75% of the width of the box. These targets are kind of subjective. In my software, I just tell it to project it out 1-to-1 so I can see, you know, potentially where the maximum movement might be. So if I'm looking at the maximum movement, at least in the short term, or, you know, based on this Darvas squeeze signal that took place on this week, that's what I'm looking at. Now, if I jump over to the daily chart, we had, you know, you have some short signals in here, but they're against the trend. So I ignore those. We talked about last week how, you know, this did fire off short, and it already hit the target, and that's normally, or it came close to it, the target of this Darvas box, and that's normally where you'd want to find at least some support come in. So we did see that happen, and now what you have here is, this is a signal where you would want to pay attention to, where you get, you know, you get a long signal continuation in the direction of the trend take place. So this is a signal you'd want to pay attention to, because the major trend is still, you know, long side, still buy side biased. So from this perspective here, so you had a signal fire at 12,974 long. We just blew through it in this one big bar. And then you can see here it's printing a potential target based on this Darvas box here, projecting it out of 13,297. So, you know, we're at, I think we closed the week at 13,000. 163. So I think we still have at least another 100 points of upside. So I think this target is achievable. So, you know, short-term target 13,300-ish, I think is definitely achievable. The chart looks intact in terms of everything being long side on both the daily and the weekly. So I think this is in the cards. I don't think we shouldn't have a problem really getting there. As I said on the looking at the last chart, we have a short-term kind of reversal candle setting up, but you know, that's just probably signifying a minor pullback and then a potential push higher. That's what I'm expecting to happen. Okay, so let's take a look at the sister indexes here just to kind of round things out. So on the S&P, on the ES futures, so basically what we're looking at, weekly target potentially 1500, and we're looking at daily target potentially 1411. So I think that's in the cards. The chart formations are in alignment between the different indexes there. So that looks good. I think we're going to get a move up to those levels. And looking at the NASDAQ futures, the force is strong with the NASDAQ futures. You can see here we have potential target of 22,888. There's a lot of eights there. It's kind of a lucky number, actually. So we're looking at a target of 2888. I did some day trades on the NASDAQ last week. We had some good intraday buy signals, and I did make a little bit of money trading the NASDAQ futures intraday, day trading them last week. They've been moving really nicely, actually, you know, when you have good intraday trends. So the daily chart, there's no fresh signals, but you know, you can see this pullback held nicely to the 21 EMA on the daily chart, and it's just pushing higher. So if we get another pullback here, we have some short-term weakness as well. If we get another pullback here, it probably would, you know, be worth taking another, you know, stab on the long side, you know, with a decent risk to reward ratio where you're going to, you know, place your stop below the 21 EMA and at a reasonable level and try and get at least a 1-to-1 risk to reward ratio and trying to get at least, you know, bounce back up to that level. I don't know if we're going to get that quick of a pullback, but it wouldn't be unusual. Well, that lines up quite nicely, you know, getting a pullback to this breakout point where you get a retest. So in other words, you see this high here, this swing high, swing low, swing high. You could get a potential pullback right back to this congestion level here. So if you've got if you get a pullback like that, and then this support is always rising, so it meets it right at that level, that's probably a good confluence level to look at a long, and then you know, with a decent stop, a decent risk to reward, and then look for a bounce at least to retest those intermediate highs. That's a pretty decent potential trade setting up. Okay, and if we take a look at the transports, you can see that the transports on the weekly held this trend line. This was a pretty good confluence area here, where you know, you've got the top of this price action here, which was resistance, break above. It's going to now become support. You have the 21 EMA coming in at that level, and then you have a trend line coming in at that level on the weekly chart. So you've got three good things going for you, right? You've got price support, and it's hard to write with a mouse, but you've got price support, you've got moving average support coming in at the same level, and you have trend line support coming in at the same level. I like those kind of confluence odds, if I can call it that. I like those kind of confluence odds. This was a pretty good support level, you know, and you can see now that it's pushing to new highs. The question is it going to break out of this box here? Is it going to break out of this Darvis box here above these highs and put in a new swing high? So that's potentially in the cards. You can see that's on the weekly chart. You can see now on the daily chart, you know, you had this minor downtrend in place, and now you have, you know, this is a pattern I look for. I look for this kind of pattern intraday where you have a downtrend, right? So you're getting a lower high, lower low, higher low, you know, so you're in a downtrend, right? Lower high, lower high, lower low, lower low. So then what happens is here you get a break of this trend line, and you can see this Darvis squeeze signal here kicked in with what I've called in the past a Darvas squeeze reversal, right? So then what you get is a situation where what you really want to see, because this is really not sustainable, this move up. So what you want to see it do now is pull back, and you want to see it put in a higher low. Now you don't know how low that's going to go, but as long as it doesn't violate these lows, it's going to be a higher low. So you get the reversal signal initially, and then you get a pullback. You want it to hold that swing low, and then you want it to push higher. But this could potentially come all the way down to even to this trend line. I mean, that's possible as long as it doesn't violate these lows. So I think looking at the stock index futures and looking at this breakout move with a potential target here on the transports, you want to see the transports kind of confirming with what the stock indexes are doing, at least with what the Dow is doing. Some people have written in the past, Dow theory. You want to see the stock index moving with the transports, because the transports are kind of telling you, things are moving in the economy. So, you look for those kind of correlations, those kind of things to move in tandem with each other. So if you look at it from this perspective, I think this is unsustainable, this big push up. I mean, anything's possible in the market. Don't get me wrong. Anything's possible. You could just get bang, target hit. But I think what would make more sense here is, you've got this downtrend, and then I look for this pattern even intraday when I'm looking for reversals. I look for it to do this. I look for it to close above the 21 period moving average. I look for it to kind of have a kickoff bar, where this is a pretty good kickoff bar. And then I look for it to come back down and meet this rising support, the 21 period moving average, and put in a higher low and then move higher. And there's your kind of confirmation of the reversal. At this point, you do have a reversal, but you don't have a safe entry into something like this. I'm not saying that I would trade the transports. I don't even know if you can trade the transports directly. But what I am saying is that, if this was, let's say, an instrument that I wanted to trade, this is what I'd be looking for. I'd be looking as a learning opportunity. I'd be looking for, this rising support, this pullback, and I'd be looking for it to hold and put in a swing low, right? A swing low or a higher low, right? And then for it to start pushing higher. So that's what I'd be looking for, and then ultimately to hit that target. So if these are moving with the stock index futures higher, I think we're intact to hit some of those targets we talked about earlier. So now I'm going to take a look at the notes and the bonds. Here's the 5-year. We've had some interesting developments this week take place, and I'm going to use red because I think we're going lower in the bonds. Now on the weekly chart, we've been in a massive uptrend. I'm not going to show the history, but I mean we've been in a massive uptrend. So when the notes and bonds are moving higher, interest rates are moving lower. So this is interesting to note from a broad economic standpoint that, we had this last kind of long signal here. It did move higher for a while, but now it's starting to break down, and we have this one weekly bar on the weekly chart where it broke below the key 21 period moving average. And now you can see we're in a squeeze. So if you look at on my radar screen for the 5-year, we're in a squeeze with a potential breakout on the Darvas squeeze. So this is interesting to note. If we break this level, I think we're going to go much lower in the bonds. Okay? If we break this level of this Darvas box, I think we're going to go much lower in the bonds. Now, if you look at the daily chart, and what that means, essentially what that means is now we're looking at potentially higher interest rates. So if we have, this is something, if you have any long-term debt, you may want to consider, talking to your registered financial representative. Obviously, we can't provide you advice, but we are, just making observations on what we see. And one of the things I see here is that, a lot of people have been placing bets on bonds and notes going lower, which means interest rates could go higher. So if you have any long-term debt, you might want to consider keeping an eye on the interest rates and maybe talking to your lenders that if it breaks above a certain level, that you can lock it in at a certain rate that's feasible to you. So what I'm looking at here from a broader perspective is if interest rates go higher, there's going to be a lot of ramifications with the real estate market and with other, parts of the economy that tie into, what do higher interest rates mean? I'm not an economist, but I do know that, higher interest rates mean, probably lower demand for real estate and things of that nature, better rental markets, etc. So, but from a strictly trading perspective, what you can see is here you had a reversal of the trend. Now, this signal fired off here long when the trend was about to roll over. So this was a tricky spot to be. Here you had a minor downtrend, and then you had a potential Darvish squeeze breakout signal, but it failed. And you can see here you didn't have everything in alignment. You actually had, red Hakanashis. You went into a squeeze, meaning you're going to get some movement. The MACD rolled below the zero line, and it rolled over. Okay, it crossed over, and now you have the actual trend rolling over. So what ended up happening here is you had this Darvish box in play, and then you had a break of the bottom, and you had a short signal form right at this break, and it already hit the target, and it's actually extended beyond the target. Now, you have to be careful here because it extended, it went probably two times the width of this Darvish box on the daily chart, right? On the weekly chart, it doesn't look like a big deal, but on the daily chart, on the weekly, it doesn't look like a big deal. I'm sorry, I hope that's what I said. On the daily, though, it went twice the width of this box, right? You can see that this is about twice the width of that box. And what you're having now is signs of accumulation. You see when these tails close 50% off the lows, you've got signs of accumulation in here where you're building in some potential support here. So what I would expect to happen is a push back up to meet this falling 21 period moving average, and then potentially looking for signs of weakness and a continuation roll down. So I think we may be entering a period potentially where bonds are starting to roll over. So keep an eye on interest rates. Keep an eye on this. This could be a pretty significant development. And I mean, the correlation has tended to be, notes and bonds go lower, stock market goes higher. Now, correlations work until they don't, and you often get decoupling and you get some weird things going on with that. But I mean, if the correlation kind of comes back into effect, we are seeing higher movement in the stock index, and we are starting to see lower movement in the bond markets. Okay, so what we talked about with the stock index is where we had that bar, that closed close to, its lows on the daily chart, and a short-term potential rollover, and, just a pullback opportunity in the stock index futures. Well, you might be looking at a potential, a snapback rally in the notes and the bonds. So that would kind of play out nicely where you get a pullback in the stocks and you get a retracement in the bonds, pullback lower in stocks, retracement higher in bonds. Here's a pullback buy opportunity, and here's a retracement sell opportunity. So that looks doable. It looks interesting. I'll keep my eye on that next week. Okay, wow. Let's look at the 10-year now. The 10-year. Admittedly, I wasn't really watching these signals firing off, but you can see, look at the 10-year. This is pretty crazy. The 10-year had this Darvish box, and now you're still in a valid uptrend here. And if you look at this, this is a weekly chart. It's going to take a lot for this trend to roll back lower. But you do have some signs of weakness coming into the bonds where, you have this Darvish squeeze fired off. This Darvish squeeze fired off, and it's already hit its target on the weekly in 1 week. That's pretty major. And then now you have this red Hakanashi coming into play. You're in the squeeze. This is already rolled over. It's still above its zero line, and the trend is still higher. So this is kind of, I think what you want to see here is several weeks of close below this 21 period moving average. You want to start to see it roll over to see this kind of come into play. And then you miss this move, but this is kind of a heads up. And then what you might want to see is a retracement, and continued signs that it's going to roll lower. So, I mean, this is all still fairly early stage. It's actually quite early stage, even though you're looking at a weekly chart. If you look at the daily chart, you know, you had a lot of slop and chop in here, and then you had this range develop as denoted by this Darvis box, and you had the same situation happen here. Here you had an initial short, and I think we said last week if you get another break of this level, you know, sometimes you can use the work like this because the first signal might not come into play, and then you wait for you know, a second, you know, the second to go with, and then you have you can sometimes use this work in that way. Sometimes you'll miss the trade, but it is safer. You know, if you get an initial break here and then you got to wait through all this pullback, if you short at the low and then it's like, oh my God, you know, this is quite a pullback. But then once it breaks it again and you see you get another signal here, and now you have more indications, you know, you've got this longer squeeze that's been in play. Now you have red Hakanashis before the signal fired off. This had rolled over, and then now you're just starting to get the trend. So this is why I say it's early stage. The daily trend just rolled over, and I think it rolled over when this signal fired. It just started rolling over. So this is all very early stage stuff. But you can see here it's already hit the target, at least of this on this daily Darvis squeeze. On the daily, it's already hit its target. So I think you should expect some support coming in here. You can see it with, you know, potential accumulation in these candles. But then I think what you should look for, or I think what I'll be looking for, not necessarily what you should look for, but what I specifically will be looking for, is a move back, you know, up to meet this now falling support or falling resistance, you know, where the moving averages have rolled over, and then you get this, you know, kind of a snapback rally back up to the 21 EMA, and then look to see, you know, you don't have to get it right here. I mean, you can get it here and then look at a stop just beyond it, but sometimes, you know, you can get some pushes above it. So I think what you'd want to see is maybe a push to this level, a retest of this level, or a retest of the where the falling 21 period meets the price action, and then look for it to start rolling back over. So that would probably be a safer entry if this is going to continue lower. Now we are, you know, we are still in a massive uptrend on the weekly, so this could snap back and turn around at any time. So this is all very early stage, and it's kind of like, okay, you know, keep an eye on it and see if we're going to start rolling. But, you know, if you're going to take any positions, manage your risk appropriately, because it can, you know, snap back and rip your head off at any time. Okay, and let's round it out with the 30-year. Now with the long-term notes, bonds, I'm never really quite sure what to call it. Are they notes or are they bonds? I'll call it the 30-year note. So basically, like, you had an initial sign of weakness on the weekly as well. So that's kind of following suit. It closed close to the bottom of the range, but not exactly at the bottom of the range. It broke the 21 period exponential moving average. Signs of weakness coming in. Okay, signs of weakness. This is still positive. The daily chart, you had a short signal as well, a Darvis squeeze short, and your target is down here at 134-ish, and, you know, we'll probably hit that target, but you are getting a little bit of, you know, signs of maybe that it will bounce back, you know, back either to that level, to this level, and then potentially roll back over. So this is, like I said, this is all early stage stuff. Keep an eye on it, and particularly be aware of how this might impact, you know, longer term interest rates, because if interest rates start, if these continue lower, interest rates will go higher. I mean, there's just really no getting around that, I don't think. Okay, and here's the 2-year. Thought it might make sense to have a quick look at the 2-year as well. So on the 2-year, you have a Darvis squeeze signal on the weekly chart. It's against the trend still because this is early stage, and it takes a while for the weekly trend to turn because this is long term. But you can see here that it's losing momentum. Okay, so you can see it's losing momentum. Everything else is you know, in alignment. Actually, I should say in alignment to go lower. So now on the daily chart, you're in kind of a more established downtrend, okay, on the daily chart. And what you can see here is you have short side signals here. This squeeze fired off short. This rolled, the MACD rolled over below the 0 line, crossed over, and now the trend, my trending indicator is actually showing, back here, going back several days. These are all daily bars, so each one of these represents a day, right? Daily chart. You've got, you see this 8 and 21 period crossover here, and you can see, you had short signals coming in all the way across the board, even at, at that level. So I don't think it would be uncommon to get, like this situation where you're going to get a retracement rally with a potential, potential to get short somewhere in wherever, these levels come together here, the price action with the falling 21 period moving average. So this all, across the board with the 2-year, the 5-year, 2-year, 5-year, 10-year, 30-year, they're all, the longer terms are all pointing to weakness. So I think we're going to get a little bit of continuation in there. In the short term, we may get actually a retracement higher before we move lower again, which is not uncommon. So this will be something to keep our eye on going forward. Okay, so the dollar index, we talked about last week how we thought it would come down and test this level. It didn't actually do that like it did here. It only seems to do that when I'm actually in a trade expecting it. Okay, so it didn't actually hit this level. It held this support area, and this where these support areas came together, this trend line and this 21 exponential moving average. It started to push off. Now this was not what you'd want to see for continuation up, but you've got some weakness in here on this week where it closed close to the bottom of its range. Doesn't mean that it's not going to push higher, but it's just kind of a one piece of the puzzle. Now on the daily chart, it's been actually kind of messy, but it's just kind of grinding higher, and it's pulling back to, it closed close to the 21 exponential moving average on the daily chart. So, I mean, there's not really much to do with that. This still has a long bias. Okay, so I wouldn't want to be short the US dollar at this point in time. Still has a long bias. Question is it going to come back up here and retest these highs and potentially break through them, or is it going to find resistance, in this area and just kind of either roll over, or worse yet, just go sideways? I hate sideways markets. It could go sideways as well. So we're kind of in, we're above the 8-period exponential moving average on the weekly chart. We're above that trend line. It's still bullish. You had one red Hakanashi come in here on the week, probably because it closed off of its lows. Probably because it closed off of its lows here. So this kind of closed out a red Hakanashi, but the momentum's waning. This still needs to roll back higher to be positive. So you've got a little bit of divergences in here, but I mean overall this is still net on the buy side. It's still net bullish for the US dollar. Let's take a look at the euro. I'm not sure if I left the video recording there when I was flipping between screens. If I did, I apologize. It's not that easy to edit out. So let's take a look at the euro, the inverse of the US dollar, and what you can see here is we talked about how it kind of failed this trend line, even though we had initial push above the 21 period moving average. Now this is another reason why, like, when you get a close above the 21 period moving average on any chart time frame, that's a heads up, but it's not a guarantee that it won't just come back down in reverse. What you want to see is it actually build some space, some air above the moving average, and then pull back. So whenever you see a break above the 21 period average on either direction, it's a heads up. It's something to watch. But you really need to see where it's gonna, it closed the week here and then it closed right back down. So you're always in a tricky area when you're in there, in and around the 20 period moving average, unless you already have a situation where you're well above it and then you're pulling back to it, or you're well below it and then you're pulling back to it. Those are the safer kind of entries to use, that dynamic support level as an entry point. So if you look at this situation here, this rolled over, but you've got some potential signs of accumulation here. It's not ready to just roll over and die yet, you know. So you've got a situation here where, you know, it could come back down and test these lows, but until it actually breaks these lows, you probably will see like a little bit of maybe back and forth, or you'll just see it in and around these areas. And then if it breaks these lows, it'll probably break them decisively, you know, if it's ready to go. You could even see a potential situation here where we were talking about the US dollar on the flip side, where if the US if it does hold these lows and puts in a higher low, you know what I mean, you could actually see some continuation upside. So this is a tricky area to be in. You basically want to, from a swing trading perspective, I wouldn't trade this. What I'd be looking for is for either a higher low to be put in for a reversal to take place, you know, an early stage reversal and a break above these levels, or I'd wait to see a break below this level here and see if we're going to get some, you know, some real rapid action to the downside. I'd probably want to see a squeeze, some red dots coming in here, and see a squeeze forming to let me know that we're going to have some fresh volatility, some fresh movement come into play. So for the time being, I think this is kind of, it's a tricky area to trade. You're not really getting a lot of movement in here. You know, you're not really getting a lot of movement. You were in kind of a minor uptrend on the daily chart. You didn't even really violate these lows yet. You know, you're in kind of a minor downtrend now. And, you know, at least, you know, for these days. And you don't really have a break of even this swing point. So, you know, unless this actually comes back down and breaks at least this level, then I think you might get some, you know, then you'll get some downside from the $1.30. So this $1.30 is a pretty key level, I think, when you're looking at, you know, the Darvis box support, and you look at price support. You know, you can see this accumulation in here off of that level last time, and it, you know, pushed up, and now it's coming back in. It tested this level, it bounced. So I think what you really want to see is a break of the $1.30 level to get more excited on the short side. And then if you do get a break of the $1.30 level, then you've got this level coming in here. Let me just throw a horizontal line in here so it will tell me the actual level. Drawing horizontal line. So these lows are at like 126.50-ish. So I think if you see a break of $1.30, then you have a potential to move down to about 126.50, 126.40-ish. So, you know, that's in terms of the number of ticks that you can grab out of that, that's a pretty decent move. It's definitely tradable. You know, from $1.30 break of that level down to $1.26.50. 26.50. That is, can I count in my head? That is 350 ticks. That's tradable. You know, that's definitely tradable. So, so that's something to look for. I'll be keeping my eye on that to see if we're going to come back down and test this level. And then if we get like some fresh signals come in with a break of this level, then it's really game on. I mean, this is a decent move, but if this level breaks with a fresh Darvis squeeze to the downside, then it's really game on, because then you have this entire range potentially that you could move to the downside. So that's really the bigger move, but this is definitely a tradable move. Okay, let's take a look at the Australian dollar. So, I mean, net, I think we still have kind of a long side bias on the Australian dollar. I'm out of the trade from the other week. It didn't really get through that resistance, and it just kind of waffled down. It touched support at the 8 exponential moving average. You can see here it came down to the 21 exponential moving average, and you can see this accumulation in here, and it closing near the top of the range for the week. So that's, you know, net, that's bullish for the Australian dollar, but it's just kind of in no man's land. You really need to see a break above these levels in order to get anything going on the upside. It's just kind of meandering about. You can see it's been sloppy in here. It didn't do what we were expecting it to do. It actually kind of drifted lower. Now it's right at, you know, short-term resistance at the 21 exponential moving average. You had a short squeeze fire with some potential sell signals. You had a Darvis squeeze short fire. It came down. It hasn't really touched this target level entirely, but I mean a 75% move of the signal is pretty good. So you have some positives for it, you have some negatives for it. The positive is that it did fire a short signal, but it's close to potential support, right? So the negatives going forward is you got red Hakanashis, but now you have a blue. You had a short signal, you had this rollover, but now you have potential shorts coming in. But if this kind of starts moving back up to the high side and it holds this support level, then I think you're still net bullish on it. I wouldn't want to be short it. If you hold this level specifically, 102.67, I think you're going to find some support in there. Now let's just take a look at this chart, zoom out a little bit and see if you have any price levels that come in there as well. So you have, yeah, sort of, nothing clean, nothing clean. So at least not in the short term. You do have that level, which, okay, so you have these price highs back in here where it initially found some support, in and around this level. Okay, so I think what you'd really want to see here is, I think you had a this uptrend got violated here, but if you get a continuation back up here and you see some signs of strength, then I think we might get a move to retest those highs. If we break this level here again, that's bullish. And this, as long as it holds basically these support levels, I think it's still bullish. If it starts breaking these levels decisively, then I think you need to either reevaluate or look for it to put in, another swing low on the weekly chart. If it breaks this level here, then I think I would switch my overall bias to negative. So I guess what I'm saying, to make a long story short, is at this point in time, I'm still net bullish, but you're in no decision territory. So just kind of watch it, let it unfold, wait for the next signal kind of thing. Okay, taking a look at the Canadian dollar. The Canadian dollar had an initial long signal around par, and it's just kind of meandering. You've got some signs of accumulation, but I think at this point, because of everything that's going on, I think you would really need to see some decisive movement in the Canadian dollar. I mean, you do have net bullish indications and signals on the weekly chart, but it seems like the resistance overhead is probably stronger than anticipated. And because of what happened with the Australian dollar, where you just couldn't break that resistance and then you had a pretty decent pullback, even though it is still, in my opinion, net bullish, I'm just not that excited about it. I just don't think, there's not enough kind of action taking place. There's not enough momentum, I guess is what I'm saying. There's not enough momentum. There's not enough price movement to really make it interesting. It's really just consolidating. And you can see, this initial target here kind of hit, but it's just really sloppy. I mean, there's nothing going on here. You can see you're in a long squeeze. You really need to see a break of some kind of a level, I think, in order to get things going. If you can break this level to the upside, then you would hope that it would kick off and start some kind of a movement up or down. But at this point in time, it's net bullish. You have a little bit of divergences in here, but it is net bullish. But I think maybe we're just in consolidation mode until we really kick something off and get something going one way or the other. So the British pound, or cable as some people like to call it, I think we're still kind of holding in. We saw a reversal pattern kind of shape up before, or what I thought was like a kind of reversal pattern where it broke through the trend line. It's kind of going sideways. I think as long as we hold this potential, put in maybe a swing low and then move higher, as long as we hold this low here, which I guess you could consider this a swing low, and then maybe put in another swing low, I think it's going to grind a little bit higher. But it's kind of in no man's land too. You had this initial short signal fire here. At the time, it was kind of, it just started to roll over here, but it was kind of against the trend. But you do have, you had the short squeeze fire, you had these short side indications coming in with a potential target here. I mean, I think you're just in chop mode. I don't think there's really anything to do here. You need to wait for more, a better trend to form. You need to wait for better indications really to come in. You're just really sideways here. And we'll just round out the currencies with the Japanese yen. I don't really look at the Swiss franc a lot. Maybe I'll start looking at that in some of my in the upcoming videos. But the Japanese yen has just been going down. Like, it's just been moving lower. You can see here on the daily chart, it's continuing to move lower. We said, be careful of potential rapid snapback back to the 21 period exponential moving average. It hasn't tested that in a long time. We haven't seen that yet. It's just kind of drifting lower. I don't think I'd want to be shorted anymore at this point. I mean, if you were lucky enough to get shorted, somewhere along this way, I think now it's pretty extended, and I'm expecting some kind of a rapid move upwards. This isn't like major signs of accumulation, but you've got some minor signs of accumulation in and around the bottom here. It's nothing to write home about, but I am expecting at some point, one of these kind of moves higher, and I think that would be the better opportunity to look at taking some kind of a short-term entry, because this is, now you've got some decent trending in place, and you just need some kind of, you just need some, I hate to buy the low hoping it goes lower. Some of the people I follow say I don't like to buy the low hoping it goes lower kind of thing. And I agree with that, because, at some point, if you, let's say, short the low. So if you shorted the low hoping it goes lower, and then you get in a situation where you're right on the direction, right? You're right on the direction, but then all of a sudden you get this, because it's overdone, you get this massive move back up. You're going to take a lot of heat on that, It's not the best kind of entry technique to use. I like to, buy pullbacks or sell retracements. They're the safer entry, in my opinion. So I'm expecting something like this to happen. I probably won't trade it, but I like to study the markets. I don't trade every single market that I look at, obviously. I pick and choose the markets that kind of resonate better with me. And I'm more of a cautious trader. I like to, I don't throw on huge position sizes. I have in the past, and you just don't want to bet the farm on any one position. There's always opportunities in the market. You want to develop more of a consistent approach to trading and manage your risk, because that's how you're going to stay in this game, and not this game, this business. That's how you're going to stay in this business for the long term. But when I look at this from a student of the markets kind of perspective, or from a study in the markets perspective, I don't think I'd want to be short here, hoping that it's just going to push lower, when there's a possibility that it's overdone and it's just going to have a rapid expansion to the upside to test falling resistance. So at this point in time, it does look lower. On the 60-minute chart, it's potentially building in a bit of a base, where it could kind of launch off of and do this scenario here. So at this point in time, be cautious on the short side. On the Japanese yen, it could turn around and rip shorts heads off at any point in time. So let's look at our shiny friend gold now. Gold is a bit of a conundrum. I mean, I was long gold and I had to close out my position for a loss. Let me see, in this area here where it looked like we wanted to go higher. It looked like we wanted to go higher here. But then, we had this kind of potential game changer when Bernanke came out. This one bar here. Let me just kind of zoom in. It's hard to see here. This one day, and I apologize, these charts are a little bit messy with all these signals that fire. But, we were long when we had this long signal. We bought this pullback. We were in the profit. And then, we talked about how you get this game changer day, where this was the day Bernanke came out and spoke. And I still don't know exactly what he said, and I don't really care. I'm just looking at the reaction. And you can see here, This one day was a game changer. So I was expecting, you know, at least a 50% bounce of this move to cut my position, and it just started kind of drifting lower, and then we got a bounce here. But I mean, it was still only into this range. So I think now you have to consider that gold, although I think we have good support around 1543 here, in and around these price lows where you can see there was these areas of accumulation. You can see here it held this support and it bounced. You've got resistance obviously up here, resistance up here obviously now. You can see that now. But I think you have support around 1543. Excuse me. But now you're getting a situation here where you know you've closed. Now you've got a pretty one bar decisive close above or below rather the 21 exponential moving average on the weekly chart. But on the daily chart, it's becoming a little bit more constructive to the downside. You have a little bit of accumulation coming in here, but I think at this point, I think the only way to look at gold is on the short side in the short term. I know that, you know, it's going against the weekly trend still. You know, it's going against the weekly trend, but I think the way you have to look at it is, where's my support, where's my resistance? And if you look at it, you say, okay, I've got resistance overhead. You know, now the 21 exponential moving average is building in, you know, falling resistance overhead, right? You've got an 821 crossover now. So I think the way you have to look at this is you have a potential move down to this 1543 level. Now, it might not do that. You know, this could turn around on a dime, and this is what's a little bit crazy about these markets. But from a risk-reward perspective, I think what would make the most sense if I was going to trade this, and honestly, I don't think I will be, but if I was going to trade this, I think what I'd be looking for is potentially a move back up to 1700 is a pretty good round number, where you have, you know, you don't, if it closes above this bar here. So I'm looking at this from a risk-reward perspective, from a chart pattern perspective, and from a levels kind of perspective. So when I look at this from a combined approach, what I'm saying is, you know, this looks lower, right? Obviously this looks lower, this now looks lower, and this is now looking lower on the daily chart. So all these things are in alignment for looking lower. So then I take it to the next level and I say, okay, so now we thought we had a long, but we have a short here, right? Because we had this kind of crazy reversal take place. We had an 8 and 21 crossing over. The 8 period crossed below the 21 period. And then we had a retracement back up. We had one retracement back up to the 21. It failed and it pushed lower. Okay, so I would expect probably another 1 or 2 retracements out of this for it to fail. And then I would start saying, okay, now it's retraced to the 21 period moving average, you know, more than 2 or 3 times. Not necessarily a safe entry. I'd just take a wait and approach, see, right? So you have one move back to the 21 period moving average. The next move back to the 21 period moving average, I think what I'd be looking for, if it came in, you know, I think we're holding short-term support in here. So if we got to move back up here, I think what we would be looking at is we have some price congestion in here, right? We have some price congestion in and around this area here. So where this level kind of meets this falling resistance, if we got to move back up somewhere in and around this level and then look for signs of weakness maybe on a shorter term chart with a pretty good risk to reward ratio. So what I mean is this. You get a move, let's say, into here, and you start looking for areas where you can take a position. So what you can do is drill down to like a 5-minute chart might be a little bit, you know, anywhere from a 5 to a 60 period or a 60-minute chart, and look for a rollover or look for signs of weakness in one of these charts. Once it hits this level, you want it to actually come up and either stall out or hit the level, maybe even probe above it a little bit and wait for it to stall out, and then look for, you know, one of these charts to kind of roll over. That's how you time it better. So then what you would be saying is, okay, if we close above this bar here and we get a move up, like we can get a move up to that level, test it, probe above it. You don't want it to close above it though. It's okay if it actually comes up and it probes the high of that level, you know. So this is really, that really would be a logical stop out point. So if you look at that from that perspective, if it comes up here and it just goes and then it comes back off of it, and then there's signs that it's going to roll over. So you don't want to have like necessarily a hard stop above it if it just shoots up above it. But let's say you come up to here and then it looks like it's going to roll over, then that's where you would probably place a hard stop above this swing high, right? Because if this high or low, if this lower high, right? If this lower high is going to hold, then from a chart pattern perspective, you shouldn't have a close above that, or else you have a potential reversal taking place. So this is a logical area where you would place a stop, you know, from a chart pattern perspective. So I think if you get like a retracement, and I'm sorry for drawing this out, I'm trying to explain it clearly. You get a retracement, stop above this swing high, and then you get, you know, you look for signs of rollover. That would probably be the safer entry. So you've already had one test of the 21 period moving average, you know, and then let's say this 20 or 21 period moving average comes down. You have a second test. You look for a possible entry somewhere in and around that area, right? Where you have price congestion come into play, you have falling resistance come into play, and where you have a decent risk reward level, you know, where you don't have to place this. Like if you were to initiate a short, let's say in this level, okay, here's the logic here. Let's say you said, okay, I'm just going to take a short in this level. You have to logically say to yourself, you know, this could come all the way back up to here or even up to here. Look at, and you know, if you're going to risk this much, then your reward better be at least that much. So the safer entry level is really, you know, the next retracement. So I hope that makes sense. If you have any questions, you know, send me an email and I'll try and be a little bit more clear on it if I'm not already. Take a quick look at silver. Silver doesn't look as weak as gold. Silver doesn't look as weak as gold, but you know, you had this initial long signal that failed, or at least in the short term. You're kind of in no man's land on silver. You've got mixed signals here in silver. I would just leave this alone. I really don't know what to do with that. You have, you know, potential lower high, right? And here's a potential lower low. You know, so you've got the same situation here. This is where your resistance is. If you're going to get a close above this, then all bets on the short side would be off. So any retracements back up are potential shorting opportunities. But I mean, the weekly chart, although it doesn't look constructive, it actually looks like a potential, you know, double top in place here. You know what I mean? And you never really know. You never really know until after the fact if that is truly a double top. You know, if you put in a swing point here and push higher, then you say, well, it looked like a double top. So it looks like a potential double top. But now if you look at it from this perspective here, I think this lower high is really your resistance level. If you were going to look at, let's say, a short in SLV, you know, or in silver in any way, I think you would probably look to put a stop above that lower high, you know, on some kind of retracement. But, you know, silver is a lot stronger, or it seems to be a lot stronger from a chart pattern perspective than gold is. Okay, let's take a quick look at copper, if that's possible for me. I don't know if I can take a quick look at anything, but this is a good time for me as well to kind of have some quiet time to actually look at the markets and analyze them and set up for next week. So when I look at this, you know, even if nobody's watching these videos, or if people are watching it, I hope it helps them in their analysis, or some of the things that, you know, that they can learn or they can take away from it, or you know, however it might help. I know it definitely helps me to do this, and that's why I do continue doing it, and I hope it helps other people as well. So just taking a look at copper, you've got resistance around $4, and you have support in and around, I guess, 375-ish. So this Darvis box that's setting up here has a net long bias, right? So I think what you'd be looking for is a break above $4. But I think if you have weakness in gold and weakness in silver, I think that's going to be tough. You've got a lot of resistance here from this breakout level, you know, and you can see that's where the logical resistance is if you get a close above this bar, or a close above this Darvis box, I think, you know, this could just go sideways, but I think you'd want to be long above this level. This level is where you'd want to be long, above $4. At this point in time, you know, you can't really be short. You don't really have any short side indications, but I think you're just kind of sideways. You can't really be long either. You need to really break this $4 level. You need to break the resistance in order to get excited on the long side. You can see from a daily perspective, this same kind of resistance come in close to $4. Support, resistance. You're just in sideways mode. So let's take a look at crude oil. This is the thing with crude oil. Like I think I was mentioning last week, if memory serves me, that if we hold this support, I think we could get a move back up to 110 and possibly move higher. The problem with that analysis is we're always expecting the markets to trend. But sometimes and oftentimes what happens when we get into a trade that looks good or we have a certain bias on the market is it could just start going sideways. And I think that's what crude oil has done here. I hate sideways markets. I only like sideways markets when they're ready to break out and move. But when you actually have a bias on the market, like here I had a bit of a long side bias, and I thought, okay, we held support here and looking for a push higher because all indications are, you know, at this time, bullish, right? So when you look at it from that perspective, and then it starts to go sideways, then you're kind of like, oh, great, now what am I going to do with that? So right now, I think that's a situation that we have coming into play in oil. And I think it's kind of, you know, I don't want to swear or anything, but it's kind of BS, because if you look at this, it's like I'm looking out there when I'm going and pumping gas in my car, and gas keeps going higher, but, you know, oil isn't really like punching higher. So I mean, it has moved higher, but not in relation to the amount that gas has gone up. And I know, you know, in the market they always talk about the crack spread, and it's just like, you know, what a bunch of nonsense. You know, if oil was going up to $150 a barrel, then I could expect, you know, gas to be going up substantially. But how does gas go up when, you know, you've got this little bit of action in oil? And anyways, I won't try and get you know, philosophical, political, whatever you want to call it here. But from a charting perspective, we had an initial long signal here. And now this is a tricky situation here, because you have bullish indications here, but this squeeze, one dot squeeze on the weekly chart fired, but it fired with lower momentum. So unless the momentum starts picking up, that could actually be a sloppy potential short squeeze. So, but I mean, the trend is higher. The MACD is higher, my trending indicator's higher, Hakinashis are higher on the weekly chart, right? And we're above, see, we've got support coming in at the top of this Darvis box here around 105-ish, and this signal came in at, long signal came in at 104.50. So these levels are pretty much, you know, they're pretty close. And I think that, you know, it's at least holding this level right now. Now on the daily chart, you have sideways action coming in. You had a bit of a nice uptrend forming. Excuse me, you had some constructive chart pattern trending action happen here on the daily chart, and you got a decent pullback. This was a potential entry opportunity, and then you had the initial bounce, but it didn't clear that swing high. So now what you have is a situation where it's just going sideways. So from this perspective here, I think there's really not much to do unless you get a decisive break out of the top of this Darvis box or below it. And, you know, you've got some minor divergences taking place here where these are kind of short. These are kind of short side biases. And you've got potential movement coming back in. And this is still long side bias. So I think what you really need to see happen, my bias really favors the long side, but you've got some cross currents in other markets like the US dollar. The US dollar goes higher, usually oil goes lower. So, I mean, these correlations work until they don't, but I think what you'd really want to see here is you want to see some blue Hakinashis come back in. You'd want to see it build some momentum to the upside and break this swing high in order to continue higher. If it doesn't do that, I mean, it could just go sideways. If it breaks below this level, I wouldn't really want to be short it, because, you know, you've got some major support here on the weekly chart coming in at 101 a barrel. $101 a barrel. So I don't think if it breaks this around the $104 level, then potentially you have, room to move down to here. But I really, my bias would really favor the upside. So if it broke below this, I'd probably just watch it and say, okay, is it going to find support there? But if it broke to the upside, I'd be more excited about taking a long side trade because the chart patterns are more constructive to the long side. So that's basically how I would look at that. Alrighty then, so geez, we're already at an hour, and I apologize for these long videos. I hope anybody watching these videos, I hope they find them of interest, and I hope that the reason why I started doing these videos, aside from helping me to kind of nail down my research for the week, some quiet time for me to do this, was also to help some of the meetup members to look at some of the things that that other people are looking at, and I was hoping that based on my experience and my analysis, that they could kind of pick up on some of the things I look at, and hopefully it would help them to either compare to their existing methodology, or to maybe help them develop some type of methodology where maybe they don't really understand charting or they don't understand technical analysis in such a way that maybe it would give them a jump off point, or at least look at what other people are looking at, give them something to some kind of reference point, some kind of starting point. So I know the videos are long, but I hope that they're actually being helpful, in that they're not just being used as where's a potential trade opportunity, but also as a potential learning opportunity, which I think is even more important than just looking for where the next trade might be, but to look at how to maybe learn how to analyze some things and learn how to fish for yourself. Take what makes sense to you, forget the stuff that doesn't make sense to you, and try to look at it as you take something, make it your own, and put it into your own toolbox that you can kind of go forward with to catch your own fish. I hope that makes sense. So we're just going to round this out and look at the grains, and then we're going to wrap this video up. But basically what you're looking at here is we're looking at corn, and we said we think corn is going higher. It's still very early stage, but it looks like we're breaking above this level here. It looks like we put in on the weekly chart a short-term a lower high, right? And then it looks like we're building in some consolidation, and we're starting to push higher. So I'm really looking for a breakout, and then we did have a long squeeze fire here. So I'm looking for a breakout above this level here, and for it to to push higher. This is bullish. Hakanashi's bullish. Squeeze bullish. This is below the zero line, but it's crossed over, and this is just starting to cross. The trend is just starting to cross. So this, from a weekly perspective, is still quite early stage, okay? Still quite early stage, but you're getting quite a bit of movement in here, like from 649 to 673-ish. That's a big move. That's a big move. I think that's like 30 S&P points in terms of profit and loss, if I'm not mistaken in my math. So now from the daily perspective, still kind of choppy, right? But you had this initial long signal fire, and I think we're going to hit that target. We were in a squeeze here. This is bullish. This is favoring movement, favoring the bullish side. As this was crossing higher, and the trend had already moved higher on the daily basis. Now you have a squeeze firing, and you have a situation here where you're breaking out of this Darvis box here as well. You're above the 21 period moving average. All of these early signs, you have a higher low here. All of these early signs of I guess what you would call early stage constructive base formation. You're basically building a base here, which I think you're going to push higher from. So, and on the weekly chart as well, you're getting tighter and tighter price action, and now you're starting to push higher. So I think we're actually looking at higher prices in corn, and I think we're looking at higher prices in the other grains as well, which we'll take a look at right now. Okay, so let's take a look at the soybeans. Now, if you look at the soybeans, we've been talking about this for several weeks, several videos, and you can see, we had this reversal pattern take place. We had a Darvis box breakout here on the weekly chart. We didn't actually have, a fresh squeeze come into play, but everything was looking constructive. This was all looking constructive, and you can see on the daily chart, You can see on the daily chart we had a long signal in and around, you know, all the way back here, and we've pushed significantly higher. Everything is intact here. Everything's intact to the long side. And, you know, now we've got a nice trend in place on the daily chart. This is very constructive. You have a nice angle of upward movement here, nice 45-degree angle. I think what you'd be looking at here, and here's the tough part. I mean, you would expect some kind of resistance to come into play, and then what you would be looking at is a pullback. So any pullbacks to the 21 period moving average, which right now sit at about 1320, I think are decent buying opportunities, either from a swing trading basis or from a intraday basis, where you get, let's say, a quick rapid pullback, and then you can look for techniques to time it based on like a 5-minute chart or a 2-minute chart, whatever. Once you slam into that level, look for signs of turning, look for signs of a higher low maybe, and a place where you can put your stop, and just expect continuation higher. Now, I'm personally not a fan of swing trading the grains. It just doesn't suit my level of risk. I don't like being potentially caught in lock limit moves. But from a chart perspective, from a chart pattern perspective, it looks very good and it looks very constructive. So as I said in previous videos, I think soybeans are leading the move. I think soybeans have kind of led the charge higher, and I think they're eventually like what happened recently on the stock index futures, where the Dow was maybe leading the charge, and then the NASDAQ came in later stage, but then kind of kicked in and started trending really well after the fact. You have soybeans here, so if you think you've missed a soybean move, just watch the corn market and wait for signs for it to kind of firm up, and look for maybe later stage entries in the corn market. That's a possibility. The soybean market looks really good. I think the safe entry now would be, the first pullback. You haven't had a pullback in many, many days. Each one of these bars obviously represents a full day. So if you got a nice pullback into 21 exponential moving average rising support, I think it'd be a fantastic, fantastic entry. And not only would it be a fantastic entry, but you would expect a decent bounce off of that level. So let's take a look at wheat now and just kind of round things out and hopefully wrap up this video. So wheat is very early stage as well. You would expect that it will follow the other grains. It's starting to build up a potential for a Darvas squeeze breakout on the weekly chart. I mean, you did get a Darvas squeeze breakout here. You're still, it's going to take a while for this trend to actually move up to the high side. That's going to lag. So, and wheat itself is a bit of a lag. Like, it's lagging, obviously, even corn, and it's lagging, definitely lagging soybeans. So this is all early stage stuff. It's still very sloppy, but it's something to keep an eye on. It's something to keep an eye on. Keep an eye on these levels, breaks of these levels, breaks of these levels, and just keep an eye on it and see if it's going to move higher. The 60-minute charts are starting to become a little bit more constructive. As you can see here, you're getting some Darvas squeeze longs on the 60-minute chart that are working out really well. Now to the long side, you've got the trend higher. So this is something where maybe you can say, well, I think it's going higher, and look at these shorter term time frames, 60-minute, 5-minute, from 5 to 60 minute, and look for maybe continuation trades in the potential uptrend. The problem is, though, we don't really have much of an uptrend. We just have early stage, kind of positive base building action. You're building your base here. You want to see it break out above this level. If it breaks out above that level, you want to look at maybe waiting for it to break, and then start to look for upward movement, pullbacks, continuations, etc. All right, and as I wrap up this video now, I've got 2 Boston Terriers on my lap. Both the dogs decided they wanted to come up on my lap now. So apologize if you hear some noise in and around here, some snoring and some, scratching around. So let me just wrap up this video here, looking at the DBC. The DBC has been a little bit sloppy as of late. We had this Darvas squeeze reversal signal here come in, And please don't lick my face, Napoleon. Good boy. Okay, so sorry about that. So we have a situation here where, you know, we had this one bar close below the 21 period moving average on the daily, and now it's you know, it's just been kind of meandering in here, and now it's starting to push back up to the upside. So it still looks fairly constructive. But right now it's a little bit sloppy. I think it's going higher, but I don't really have any good kind of entry criteria in place for it. You either got in around this level and held, and you know you're in the profit, or you're just kind of waiting for next steps. So that's all I have for this week. I'm just going to quickly link over to a meeting presentation that we're having this upcoming Wednesday. Jim Ivey of the CSTA will be hosting it in Oakville. It'll be broadcast online and in person at Trafalgar campus for the Oakville chapter of the CSTA. So we have professional trader Rob Hoffman coming in. He's going to be doing a presentation to our meetup group here in Burlington and to the Oakville chapter of the CSTA. We're really looking forward to it. It's going to be a fantastic event, and I think it's going to be a great jump-off point for people who either are struggling. They're either struggling to get started. They don't really know how to get started, or they kind of have a lot of knowledge, but they don't really know how to put it all together into a systematic approach. So based on feedback from my members and talking to some of Jim's members, Jim and I got together and we asked Rob Hoffman to come in and do a presentation to both of our groups. I use Rob's service. I've been using it for over a year now. It's really helped me in my trading and some of my putting together some of the things that I look at. I don't follow all of his techniques, and obviously I have some of my own stuff that I use, but it's been very good to see how a professional trader handles the markets each day and the things they look for. And I've incorporated some of his methodology, some of his techniques and his learning into my own in a way that I understand them, and in a way that I can kind of, the way I look at it is, you learn, but you have to internalize and you have to make it your own. Ultimately, you can't just blindly follow somebody else's techniques and expect to do well. You have to internalize, you have to understand, you have to kind of make it your own. You have to understand it in a way that it works for you. We're all different. We all have different triggers. We all have different things that allow us to understand things and to follow different things. So that said, I think Rob's techniques are fantastic. I think the way he looks at and views the markets are really, top notch. He's been doing this for, 20 plus years, and based on the feedback that we've had from our members and the things they're looking for, we felt that this would be a great opportunity, a great jump-off point, a good starting point, as an entry point into this. Now, obviously, he can't teach everything he knows from his 20 plus years experience in, an hour and a half, but it will be a good introductory, a good introduction into, what he does and what he looks at. And he'll also be, providing some takeaway techniques, at least one takeaway technique that you can start to study and possibly, incorporate into your own trading toolbox right away. So let me link over to that quickly. Okay, so here is our Burlington meetup site. You can go to, let me just grab my handy pen, and let's use blue. You can go to meetup.com, Burlington-investment-idea-meetup. That's the link to our group. So in our group here, you can find the upcoming meetups. So you have to register for the group. Now, I'm logged in right now, but if I'm not logged in, there's a big join up button here. Excuse me, and you have to click on the join button and go through the opt-in process. And you also have to, once you join, then you also have to register for the upcoming meetup. So the way to register for the upcoming meetup, I know so far 10 of our members here have have said, I'm attending. Now, but you actually have to register based on the registration information in the upcoming meetup. So because it's a CSTA hosted event, you really need to just go in, register for the event, and then check out the details of the upcoming meetup here. And it has all the instructions for how you actually register for the event through the CSTA. So all the people that have said, I'm attending here, I'll be sending out a quick reminder that they have to formally register through the CSTA. Okay, so that Jim knows, and so that the CSTA knows, in the Oakville chapter, the CSTA knows how many people are going to be at the event, so that they can, they can provide the proper accommodation. So this is going to take place this Wednesday, March the 21st at 7 p.m. It's going to take place live. Rob's going to broadcast, through the internet, and it's going to come through, live on the big screen, and we can ask him questions directly in the classroom. I believe it's S301, and there are directions available here on the site how to get there at the Sheridan College Trafalgar campus in Oakville. So, you can attend online via webinar format, right, through the web, or the preferred method is to actually be there in person I'll just say NP, trying to write with a mouse here, in room S301 at the Trafalgar campus at Sheridan College. So look forward to seeing everyone out there. I hope this video helped. And we're really looking forward to Rob's presentation. We think it'll really give you a good start in, or a good jump start out into, putting everything together if you already have, experience in the market. So really looking forward to it, designed to really help. And, we'll look forward to seeing you there, or seeing you online, or seeing you at the next video update next weekend. Have a great rest of the weekend and good trading.